Hi, this is Alex Perini from Summerhill Financial Services, just with another quick update. Now, I attended an investment forum today with a group of advisors and asset consultants from around the country, and this was part 2 of a session carried on from last week. Certainly a lot has changed in the last week, let alone the last month, and I just wanted to share some of the key takeouts from the sessions. Now, figuring out how the economic impacts of coronavirus will play out is a challenging task. Markets respond by pricing in lots of new known information and lots of big unknowns. And these big unknowns is what is currently driving down share prices and driving up expected returns. It's viewed that this downturn will not turn into a major worldwide bear market, even though a major US bear market is a distinct possibility. An Australian recession is now likely within the year, which will impact company earnings, but it's viewed that it will be V-shaped, which basically means it will be relatively short-lived. Coronavirus is clearly impacting the world economy at present, but many in the group were optimistic, as are Caroline and I, that we'll likely see a recovery in the medium term, and that the current pullback is somewhat of an overreaction, pricing in the worst case scenario. Current share valuations are looking highly attractive at present, particularly when it's viewed that interest rates will remain low for the foreseeable future. A key during these periods are looking to rebalance portfolios where it's appropriate to do so to ensure they remain consistent with the long-term investment strategy. This can be incredibly difficult for investors to do in practice, as it involves buying shares during falling markets where everything seems a bit chaotic, but it provides the long-term benefit of purchasing shares at cheaper valuations, which allow you to better take advantage of the eventual rebound in markets. Now, something that is covered less in news headlines at the moment is that government bond yields have also been volatile. And it's viewed that government bonds are carrying some heightened short-term risk at the moment, which is why many of you may have noticed the inclusion of more term deposits in your portfolios over the last 6 months. Despite interest rates being low, the purpose of these investments are to provide a secure component to your overall portfolio, and we don't want to take unnecessary risk with the defensive side of portfolios. So we'll continue to reassess and reevaluate both the growth in the shares and the defensive side of your portfolios on a regular basis. Another topic on the agenda from today's investment forum were the Australian banks. And although no one can predict the future, it's important to know that the Australian banks are extremely well capitalised, more so than many other countries. This is the main reason why they were less impacted than other banks in other countries during the GFC, and their capital requirements now are even stricter than during the GFC. So it's viewed that the Australian banks are incredibly well placed to get through this current period. Now, just a quick comment regarding some of the government announcements over the weekend, particularly relating to superannuation, to help those who are under financial stress as a result of coronavirus. The government has announced that from mid-April, you'll be able to withdraw up to $10,000 from your superannuation this financial year, plus a further $10,000 next financial year if you're unemployed, receive certain government payments, or work hours have been reduced by 20% or more. Now, we certainly don't encourage people to take this up, particularly if it involves selling shares at current prices, but certainly it is an option if necessary. The other measure is reducing the minimum pension payment requirement for account-based pensions by 50% in both this financial year and next financial year. Now, product manufacturers are currently working through the changes to adjust to the new pension payment minimums, and we'll contact you individually if this applies to you. It's important to note, though, that you don't need to make any changes to your monthly or annual pension payments. This is just providing you with more flexibility in managing your income, and it could be an attractive option if you have other assets outside of your pension to assist with living expenses, as it allows you to retain a higher amount of your assets in your tax-free pension account. As always, if you have any queries or feedback, please contact us. Thank you.